Hi friends and traders, welcome to Trending Sutra. My name is Amit, and today we are going to discuss about oil market dynamics, what is going ahead likely to be in the next quarter. Despite we are having an ongoing war in Ukraine and Russia, there is a strong winter likely to come into Europe, and other factors. Oil prices has almost crashed by more than 10% last 1 week and approximately 20% in last 1 month. Year till date, oil has performed in negative 6%, whereas in last 6 months, if we talk about, it has crashed by more than 40% from its recent high. This is happening all despite in the September or October we were having big brokerage report stating that oil is heading towards 150 or $200. So what exactly happened in last 3 months or so that or in last 6 months that oil prices actually fell down? So we have a couple of factors here. One is the supply side. Oil supply actually in the US has increased in multiple times after the corona crisis and how the production got cut down after the oil crisis, the oil prices crashed. But it has now come back below pre-COVID levels. So oil production are increasingly rapidly increase in US, whereas OPEC and non-OPEC supply also increasing. Russia is also pumping very much oil in the market. There are news that Chevron is likely to reopen their core facility into Venezuela once it got the note from the US, and that will bring another 2 lakh million barrel per day of oil production into the market. Iran is also supplying somehow, and the way China demand actually has crushed in last 1 year. So the demand and supply factors is now favoring towards the supply side, and that is why in the physical market oil prices are have come down. In future market also the backwardation of oil prices has now turned into contango, which was expected. We have mentioned this in our October, in August video. You can check more on the backwardation in contango in the oil market. So now oil is right now into contango, and the demand is slowing down globally, where supply is increasing. In the latest report from the IEE, an agency from the US, which is stating that globally OPEC, non-OPEC supply, US oil production, everything is going to increase in 2023. So market is just pricing all those factors ahead and took a big dip in the market. Just look at the prices and the differentiation of the kind of a premium differentiation between this is a December contract and this is a January contract of 2023. So it is approximately 7 to 8% of premium added in last 1.5 month only. Not even 1.5 months. It's almost in 1 month. There is a 10% of 6 to 7% of premium. That means the par month contract, December contract fell less than the January contract. So the premium built up into the January contract and the discount actually and the prices into January immediately fell. Cash to premium, cash to future also prices are into contango. So which is indicating immediate demand and supply scenario is favoring towards the negative side on the oil prices. Technically also, if we see where oil are heading, so on the daily time frame, we can see it has broken its crucial weekly support trend line on the weekly also and on the monthly also. Technically, what we are expecting that as long as 76, 77 is not revisited again, the oil prices could be heading towards 60 or $65 in the short to medium term, and it might find support around 65 to $60. That is what we are expecting in the short to medium term. Whereas oil prices could be heading upward only after once it breaks the 78 to 80 zone, 78 like 77 to 78 zone. If it breaks, then obviously the prices will be heading towards upward. Reason behind we are saying that thing because $6 to $7 or max to max $10 fall is another expected in the oil prices. whereas it could resume the upward trend because the the premium differentiation between the current contract and the next contract is not more than $1. So December contract, if we are talking about, it is into backwardation compared to the January contract. So market is not expecting that much of correction in the oil, like that much of fall in the oil prices, and oil prices may not sustain those levels because, as we all know, that OPEC keep threatening on the on its output cut, and OPEC will come and intervene in the market. However, whatever will be the scenario, Russia is not comfortable even at $60. So these factors will support the market. Whereas as far as future position is concerned, as far as supply is concerned, the pressure remain on the downside also. So largely, what we can expect is in the very short term, oil prices heading lower towards 65 to 60 or even $58, and in the short term, the prices will resume towards upside. In the M6, if we're talking about, uh, prices are likely to be heading towards like 5,700 to 5,500, whereas as long as 6,000, like whereas as long as 6,100 or 6,200 is not breach on the upside, the crude oil prices in the MCX likely heading towards approximately 5,200 to 5,300 into medium term, into short term, into intermediate term, and it may resume anything above 6,300 only after, if it breaks 6,300, then it will resume on the upside. So this is how the technically market is looking like, and the dynamics of the oil is very much balanced in terms of supply. If there is a demand pickup from the channel, then obviously we see some uptrend, but we are currently expecting the prices to go down towards 63 to $58, and then it will resume further upside. That's it for now. If we find any more observation on this side, we will again post on the oil prices. Thank you for watching. Kindly subscribe this channel, like this video, and share to your traders and friends. Thank you.